Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, right now we're going to check out an article on The Guardian, basically, which was published some days ago, and it's around UK mortgage meltdown and issues around tenants not being able to pay rent. So let's take a look at what's happening right now. Obviously, you may be aware there is a cost of living crisis going on in the UK and around the world currently. So a lot of households are affected. So we've had issues around what it says here, mortgage balances with arrears jumped by 13% in the second quarter of the year to the highest level since 2016, obviously the last 7 years or so, according to the Bank of England figures that underscore the stress in the UK mortgage market. Probably primarily down to the fact that the mortgage actual interest rates have increased. Now, rising interest rates and unemployment over recent months have put pressure on household disposable incomes, forcing some families to cut or suspend their monthly mortgage payments. Now, buy to let mortgage payers have also come under pressure in parts of the country where tenants are struggling with the cost of living crisis. So, we saw a lot of landlords purchasing properties on buy to let mortgages and then basically renting them out to the local people in the area, or maybe they bought out of town. And then what's happening now is the interest rates have increased. So basically, the money that the landlords were getting is not enough, maybe, or has drastically reduced in terms of covering the mortgage payments because the interest rate has gone from literally almost at zero all the way down, all the way up to 5% as such. So that's going to be a huge increase in terms of the monthly repayments. Now, obviously, that might also mean that they've had to increase the rent in terms of monthly basis, and that's obviously affecting tenants who are already struggling from a cost of living crisis, or it may basically have tipped the scale and the landlords are selling, which is the case as well. Now, the Bank of England said the total value of mortgage balances, which had some arrears, basically 16.9 billion, up by 29% of the previous year, high since the third quarter of 2016. Mortgage arrears are based on figures showing the number of borrowers failing to make payments equivalent to at least 1.5% of the outstanding balance, right? And it says mortgage lending was also hit in the second quarter with gross advances falling by 6.3 billion to 52.4 billion year on year. Mortgage lending slumped by almost a third, so about 33%, and its lowest level since basically the pandemic a few years ago. Now, Louis Shaw, founder of Mansfield-based Shaw Financial Services, told the news agency Newspage a mortgage meltdown is approaching unless the Bank of England changes its approach. So obviously, with the interest rates high, a lot of people are unlikely to, start taking mortgages out, and you can see the prices of properties now slowly starting to go down as well. Shaw said that the speed at which mortgages are increasing is terrifying and should give cause to pause at the next Bank of England interest rate meeting. This is dire data, and we know that it's about to get an awful lot worse, with 1.6 million mortgage holders due to renew over the coming 12 months, a significantly higher rate than anyone has been used to for well over a decade. So that's going to hit people's pockets, quite hard actually. So we have to keep an eye on that. So Simon Gammon, managing partner at the finance of estate agent Knight Franks, said the proportion of mortgage payers falling behind with payments remained low at just 1% despite the sizable jump in arrears. He said that's because the vast majority of outstanding mortgages were issued under the post-global financial crisis regime, which was much more stringent when it comes to affordability. Obviously, the rates might have been a lot lower as well. However, while homeowners were more likely to make cuts to other spending before falling behind with mortgage payments, buy-to-let landlords may take a different view, he said, and that's what I've just mentioned a minute ago there. We're more likely to see arrears in the buy-to-let sector, where landlords face a unique set of challenges. Now, if landlords find their mortgage is no longer affordable, or the rent no longer covers their outgoings, they only have two choices: sell or default. And if they opt to sell, they may have to wait up to a year for the tenancy to end, unless they are willing to sell with the tenancy in place, i.e., tenant in situ, which is obviously going to be more tougher. Now, landlords are also more likely to get opt out in terms of default that those struggling with mortgage secured against their main residence. So this is an area to watch as well. And the incoming Bank of England Deputy Governor Sarah Breeden It's talking about the future. Colleagues on Monetary Policy Committee, which sets UK interest rates, basically talking about the inflation may fall at a slower pace next year than expected, forcing the central bank to keep the cost of borrowing higher for longer than expected. So this could actually go on well into 2024, maybe back end, possibly even into 25, depending on how things are. So we have to keep a close eye on that. Breeden will replace John Conliffe as the bank's Deputy Governor for Financial Stability after the MPC's meeting next week, basically saying that there's also a risk that growth and unemployment will worsen. Obviously, growth is pretty much stagnated at the moment in the UK, and unemployment's increased as well. Then it goes on to say, I will, after November, be very careful in balancing those two factors. They need to. The risk of inflation becoming embedded to more persistent economic effects, as well as the impact of tightening coming through. And that's what she told the Parliamentary Strategy Committee. The challenge right now is that the wages are higher and rising, and there's a real risk that second-round effects mean that inflation becomes embedded, right? And she said, adding that, in keeping a lid on inflation is not our intention to cause a recession, obviously, which some people think that's already here or likely could arrive very quickly. Now, the MPC is expected to raise interest rate by a quarter point, 5.5% on the 21st of September, a week away right now, raising the average mortgage payments to around $3,000 a year for a household that refinances a 2-year fixed product. Breeden said she expected inflation to be around the Bank of England's 2% target in 2 years' time, just as I just said a minute ago, 2025. Now, this article was amended on 13th of September. An early version said that mortgages had risen 13% to 16.9 billion. In fact, this value was actually outstanding mortgage balances on which there were some arrears. The value of those arrears themselves rose to 1.9 billion, an increase of 5.5%. Obviously, it's a bit dire reading and a bit of a dire video, but you can see there are issues in terms of the mortgage and the real estate and obviously the landlord markets right now in the UK. I'm guessing there's some kind of, replication happening in other parts of the world. Obviously, places like Dubai are pretty much on the boom right now, and that may be a place that a lot of investors turn to. Okay, people, I hope you enjoyed the video. Please like, share, subscribe, comment below, let me know what you think. Catch you in the next one.